Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Our guest today is David Morgan, publisher of the Morgan Report. He's also widely known as the Silver Guru, being a top analyst of the silver market. David is also the author of the Silver Manifesto and Second Chance: How to Make and Keep Big Money from the Coming Gold and Silver Shockwave. We're delighted to have him here today as our guest. Good day, David, and welcome to SBTV.
Patrick, you're most welcome. I'm always happy to do an interview, and I like doing fresh interviews. In other words, with people I haven't had an interview with before. So thank you for inviting me.
Sure, we're glad to have you, David. I really appreciate your time. David, I'd really like to know how you got started with silver. What got you interested? And perhaps even before you were coined the Silver Guru, who was David Morgan before that?
Oh, geez. Well, what got me interested in silver really was the fact that I was 11 years old when the coinage changed from 90% silver in the United States. In 1965, it went to what we call cupro nickels. And these were just plated coins that were copper and nickel plated and really slugged. So I noted that, and many of the adults didn't seem to really pay much attention to it. It wasn't like an instant revelation, like big boom or anything, but nonetheless, it was noteworthy to me. And then when I got into in civics in, I think, 8th grade, we started studying the Constitution. I brought the topic up, it says they're supposed to coin money, it's supposed to be silver and gold, and we're not doing that. Why? And didn't really get a satisfactory answer. So before I was the Silver Guru, I had a fairly brief career going as a pilot and working in the Air Force, or with the Air Force, I should say. I wasn't in the Air Force, I was on the contractor side with Rockwell International on the B-1, and also with Lockheed on the Skunk Works side, which is, of course, Black Ops.
Yeah.
Can't mention too much about that, but now this one program that I was involved in at the time was the F-117 stealth fighter, and that's been declassified, and I worked on that in my youth. So I was always interested in metals from basically time of 11 years of age onward, and really wanted that as my career path. But I took a kind of a detour into the aircraft world, but I've always was trading stocks when I was 16. So
Wow.
I think that gave you a pretty good feel for, who I was before and who I am now.
Yeah, that's pretty interesting. I spent some time in the Air Force, and they wouldn't let me near any airplane. They just stuck me on a bulldozer to clear out some paths for runways. So
Everyone has their purpose.
going back to 1971, do you recall that moment when President Nixon took us off the gold standard, and do you recall your reaction back then?
Well, actually, I do. I was at that time a hard money follower. I mean, I followed, people that were basically mentors to me, either directly or indirectly. James Blanchard III had started the New Orleans Investment Conference, which at the time was like the most world-renowned investment conference about gold, again, globally. He got out of his driver, drove him to the steps of the Capitol building, got out and basically made an announcement on what this meant on the longer term. And going off a gold standard was basically a breach of contract. This is my paraphrasing, and I haven't read the speech in a long time, but basically he gave a foreshadowing of what was to come, that we'd have inflation, there'd be less trustworthiness in the financial markets across the board, and on and on. And of course, he was kind of looked at as a crank in a way, and not much was made of it outside of the hard money camp. But here we are many years later, and we've seen such huge distortions in the market, and the free market's been pretty much abated. I mean, almost all markets are manipulated in one way, shape, or form, some more than others, some more often than others, but nonetheless. So yes, I do remember that. And I thought really at the time that it would have repercussions that would be better known by the general population sooner than it had occurred. When the 1980 peak happened, January 21st, 1980, I was 27. And I actually believed at that time that that was about it. I thought we'd had enough inflation. We're going toward hyperinflation. I mean, the official inflation rate at that time was 13%. That's what the government admitted, which is probably a pretty accurate number in those days. And interest rates are pushed at about 20%. And of course, interest is two things. It's a return on principal, but it's also a measure of risk. So
Right.
if the U.S. government had to go to around 20%, that is so much risk that personally, I thought that was it. I mean, at that time, I was absolutely wrong. I thought that this was it. It's going to fail within the next, few months or whatever. And you couldn't have been more wrong than I was at that time, because those interest rates held and the markets adjusted. The bond market got crashed, and things went on. And people adjusted to these ARMs, adjustable rate
Yeah.
mortgages, and people live these high interest rates. And then, of course, the bond market's been in a bull market for basically 40 years. So we're at a point now where I think we're going to see the reverse, where we're going to see the most coveted asset or most secure asset in the world, known to be U.S. Treasuries, are probably not nearly as safe as most people think they are.
Yeah, there's quite a few people who think the bonds they're looking at an inversion if the Fed keeps raising the interest rates. But staying on the gold standard, do you think the world will go back to a monetary system that in some way is linked to gold again, even if it's just a percentage?
Tough one. I mean, I want to be consistent, but I get more information. I have the right to change my mind like anyone.
Yeah.
I think it could. I would. Is it going to? Would? I'm not sure. I think there's, I'd say it's about a 50-50 chance at best. There could be, the SDR, which is somewhat tied to gold, paper gold, basically, but, that's a possibility. Jim Rickards kind of leads the charge on that idea. There are other ideas out there. Basically, it's all confidence. I mean, gold doesn't have to have confidence. Gold stands alone, and it is what it is. So, if you understand what gold's really all about, most people don't. But it, in and of itself, has value. And people say, well, it doesn't. Anything that takes labor, effort, machinery, imagination, and those type of things to make into something is valuable. I mean, we could debate about how valuable it is, but any mineral, I mean, most people that would say gold doesn't have much meaning, or the anti-gold bugs wouldn't argue that, their lithium and their lithium batteries on their phones, they'd say those are valuable. They're willing to pay for the lithium. Well, it's a mineral on the periodic chart as well as gold. Gold just has basically no use whatsoever at all, except for jewelry and money. Silver is a different story. It has lots of uses, but keep me on point. I think that we need honesty in the financial system. In theory, you could have a paper monetary system, but the ability for the powers that be, no matter who's in control of it, if it's centralized, always distorts, and it gets out of the, honest situation into what I would say is a dishonest one. So I'm favorable to an honest monetary system.
Yeah, I am as well. It's just a lot of people seem to think that the problem with gold is not gold, it's the politicians. They just do not have the discipline to maintain some type of a gold standard.
That's true. And let me interrupt you there. I'm sorry, I don't
Sure.
like to interrupt, but you're right. I mean, the problem with the gold standard historically has been, even though it's a policeman on the currency, the politicians don't obey it, and it causes problems. I mean, go back to 1971 when Nixon closed the gold window. He had to. Why? Because these nation states, particularly France, are saying, we don't trust you're backing these dollars at $35. The U.S. actually officially devalued the dollar. The Treasury, if you look at the books, it's $42.22 an ounce, and that was an
Yes.
official devaluation. Very few people even know that. The point being is they really couldn't continue to go on that way because they were caught. They were caught lying. They were caught printing more than the gold could back. And nation states were catching them in that lie and said, fine, here's the contract. So they reneged on the contract. So again, to your point, which is the most important part of this so far, is that even with the gold discipline, it doesn't do very well. That's why I'm so favorable to a bimetallic or trimetallic standard. And this, I think, has worked better in the past than a gold-only standard. A gold-only standard is one step away from fiat. It's been that way time over time.
The Dow Jones had quite a fall last week, and it created substantial uncertainty in the markets. My question is, do you think the multi-year bull market run in the stock markets was a result of good fundamentals, or is this exuberance just a mirage?
Well, it's overvalued by Patrick, and you well know that.
Yeah.
And so is this the beginning of the end or not, I guess is the question. And the answer is I don't know. It looks like it could be, but Friday's rally was significant enough to undo some of the technical damage. I mean, these markets are manipulated. I mean, really, we haven't had free markets hardly anywhere for a long time. I mean, after the 1987 crash, and I was there, in that situation. And then, of course, what happened was they founded the Working Group on Financial Markets, better known as the slang term, the Plunge Protection Team. And since that time, the Exchange Stabilization Fund and all these other government or non-government entities are in the markets pretty much as they see fit to do what they think is the correct thing or the right thing to do. So they just keep printing money and pump up the stock market ad infinitum. But at some point, markets, even if they're not free, tend to correct and correct to basically reality. And the reality is our productive capacity has not expanded at the same level or at the same rate that the stock market has gone over the last 10 years, 9 or 10 years. So that reality will come to the fore at some point. So I'm giving you a long answer, but the answer is it will correct. Is this it now? I don't know. I suspect it is. Mm-hmm. I think we'll know by the end of November this year. My bet is that it will be lower than it is now by the end of November, but time will tell.
A lot of people, they do talk about financial crisis, economic crisis. In your opinion, is the financial crisis greater than the one we experienced back in 2008 to be expected soon, given we have far higher debt levels today?
Yes, the problem's only gotten worse since the 2008 financial crisis. So we have more debt. We have fewer banks, so it's more consolidated. And the main argument against, the last time, basically, it was a corporate problem, more or less. You had mainly the subprime mortgage and the bets against subprime mortgage or interest rate bets, basically. These collateralized loans and these subsets where you could buy insurance on these things. And of course, it failed because there was counterparty risk, and AIG was one of the main ones holding these risk bets, and they were bailed out. So government bailed out the corporate financial system. The next time it'll be more or less a government failure, and there's really no one to bail out a government necessarily now. Jim Rickards makes a pretty good argument that the IMF, the World Bank come to rescue, and everyone goes to a global currency. It already exists, which is the SDR. China was let into the SDR as one of the basket of currencies, so they're sort of on board with what I call the master plan. And whether or not that would be, done or not remains to be determined. I think it is something to consider. But the truth is that we have dishonesty throughout the system, and that's what enough people will know, and the market itself already knows that.
What do you see that master plan as being?
Well, I think the master plan is, the banking cartel at large all know that you cannot indefinitely put an interest rate on money indefinitely and have it paid back, because every time that money is loaned, the principal amount is conjured up by the bank, but the money to pay the interest on that principal does not exist. So the only way for that payment to be made is for more money to be created. So it's a nonstop creation of unbacked, unsound, basically, like quotation marks, money. So it continually has to expand. And nothing expands to infinity, or maybe the universe, but nothing in the monetary world. So this whole system has been done time and time and time again. This is not a new event. The part that's new is it's worldwide. I mean, in the past, you had to you could see nation states doing it, and they failed, and they, reissued a different currency, or maybe they gold backed it or something along those lines. But now the reserve currency is the dollar. And of course, the BRICS have tried to kind of move away from the dollar. They have a system outside the SWIFT system for settlement, and they may be somewhat safer with those moves, but I don't think they're entirely exempt from a financial crisis basis, mistrust of the dollar all at once. And what I mean all at once is enough of a sell-off in the debt markets or enough non-buyers. I mean, once there's a situation, as an extreme example, I do at the extreme so people can think about it, where no one wants to buy the U.S. bond outside of the Federal Reserve, and that extreme case is pretty much game over. I mean, the bond market wouldn't seize up because the Fed is the buyer of last resort, but at that point, every other, financial house and nation state that usually buys them is backed on the market. So, we're in a situation that's approaching that. I mean, that again is an extreme, but easy to get people to think of it as a thought experiment. So
Yeah.
the bond market is the key, and that's the debt market or the way the system functions. So let me try to be a little more succinct. It's got to expand or it'll die. This is what Richard Russell used to say, inflate or die. If you don't grow the money supply, you're going to have massive deflation. And that's what that is what the powers that be really, really fear. On the other hand, going back to my aeronautical engineering days, there's what's called the backside of the power curve. This is in a prop airplane. And this is where you have a lot of throttle left, but you've got the airplane attitude so high that you stalled the airplane. So no matter how much extra power you've got, you can firewall it, you're still going to stall. And I use that analogy that no matter how much money you're going to print, it's worthless. It's not going to work. And we are approaching that point in time. We haven't hit it yet. But, many places have, Venezuela being a perfect example. And that doesn't necessarily mean hyperinflation in the U.S. Right. In fact, I'm inclined to think that there won't be a true hyperinflation, whatever that exact definition is, like a 20% interest rate like we had in 1980. We may only have to go to 8 or 9%, and I don't think the bond market will get that high unless there is a crisis. But we could get to a relatively modest interest rate and still have people mistrust the currency. That's the main problem, is they just don't have confidence in it anymore. Once you've lost confidence, it's next to impossible to get it back, unless something drastically changes, which is what you brought up at the beginning of the interview, and that is, do we go back on some type of a tide of gold?
Speaking of stalling, silver, it's been stalling since 2011. I think we've seen more than 70% or so correction of the silver price. Seems to be bound between $14, $15 range. Dow Jones losing about 5% this past week. I can't imagine what would happen if the Dow had a 70% correction. But from this perspective, would you say that the bear market in silver is more than priced into the silver price?
Yeah, the bear market I think it's finally at its end, but it certainly hasn't shown the strength that gold has in the last few trading sessions. I still believe I'm correct that the bottom for both gold and silver was the end of 2015. We still have higher lows from those two, both gold and silver, from those conditions. But silver really has just been really horrible as far as how it's performed relative to any asset class you want to measure against, including gold. I mean, the gold-silver ratio has been as high as 85 or so in very recent times, which is really, really an extreme. It did outperform gold very slightly over the last week or so.
Yes.
But nonetheless, it doesn't mean it's done. It doesn't mean it's over. It's such a small market. It really doesn't take a lot of new buyers for the market to really take off. What we don't, strong hands are still holding physical silver, and that's sort of the key. If a lot of strong hands are holding a good amount of physical silver, then any new buying will eventually, bring the price up. So I'm still bullish on it. I mean, I've always tried to educate everyone that is a position, especially on the silver side, not so much on the gold side, but both are volatile, that you have the right amount for you. In a lot of cases, that's 10%. I mean, extreme case, maybe 25%. I personally own more than that, but that's because it's my specialty. And a lot of mine are in equities that are based in resources, not just gold and silver, but things like lithium and moly and cobalt and, those type of things. So, and that's what I specialize in. Again, I said it twice, but for most people to have a balanced portfolio, 10% is probably enough for everyone. And in the metals and metal related investments, you can do what you want with the other 90, real estate or stocks or bonds or start a business or, there's lots of other places to invest outside of the metals. If you don't have a position in metals, I think you're making a grave mistake, especially the way the financial system is set up.
Yeah. Okay. So taking a position in metals, would you agree that the probability for the upside in the price of silver is higher than the further downside risk in the price?
Oh, absolutely. I mean, the risk to reward is
Absolutely.
probably 10 to 1. I mean, you might get $1 down in silver, but you might get a silver price that's $140, believe it or not. So the upside, yeah, the risk reward is unbelievably tasty at this place or in this point in time. I mean, to be gut honest, if you would have asked me even 3 or 4 years ago, if I thought that you see silver in the 14 range in 2018 near the end
Mm,
of that year, I would have absolutely argued absolutely not. But I would have
yeah.
been wrong. Here we are. And, I've been beat up by the markets before, certainly. And, I've been humbled by them again and again. But nonetheless, dissuade me from admitting a mistake and moving on. I mean, I've lightened up my positions at the top. I actually called the top of 2011 and lightened up quite a bit. But, looking in hindsight, I probably should have sold it all and bought it back, but I didn't. But I certainly did see the top, and hopefully I'll see the next top.
Yeah. Well, your call in 2015 of the bottom is still holding true. That was a
Yeah.
good call. Uh, we recently spoke with Jim Rogers, and he said that there are gigantic shorts in the gold and silver markets. Do you share this view? And if you do, could you let us know what the implications are with these gigantic shorts?
Well, the futures market, it's not like the equity market. In the equity market, if you bought Coca-Cola when it's, founded in the early 1900s and held it to today, everybody that got in early has made a big, huge gain because it's a business and the business prospered. Somebody that owns part of that business has prospered. But in the futures market, for every winner, there's a loser. For every long, there's a short. So there are massive shorts. So what he's really saying is there's massive open interest. There's a lot of open contracts, and they match long for short. But they are huge. And the short positions are held by a few, like 4 banks or less hold the majority of the futures position on the short side of silver and gold. And so, I don't know how else to answer that. I mean, right now, the commitment of traders shows that the commercials, which are supposedly the people that know the most about any given commodity. So commercial for wheat, for an example, would be ADM, Arthur Danfield Midland, the great food producer. I mean, these factory farms, that kind of thing. So they would be the commercials. They would be the people that actually handle the wheat from the field all the way to the supermarket, more or less. It doesn't have to be vertically integrated, but that's the idea that they know. So it'd be cotton growers would be cotton commercials. So in the silver market and the gold market, the commercials you would think would be like the gold mining industry and the
Yeah, you
silver
would.
mining.
Right.
But that in the gold and silver markets, it's basically the bullion banks with a kind of a friendly relationship with what we call, especially on the silver side, polymetallic miners that are huge conglomerates like RTZ and BHP. And they have their own hedging positions that they share with the banks or let the banks manage for them. So a few heads their own, but basically, so these bullion banks are basically in charge of being the commercials. So it's basically a pretty much rigged game. I mean, if you want to get into details, you can web. If you want to get into the real details, you can buy my book, The Silver Manifesto, and read about 3 chapters. It'll explain about fractional reserve bullion banking. And we all know how fractional reserve banking works. I mean, it's one of my, it's my mission statement of my life
Yeah.
to explain that and get people to understand why it is so bad for the the world at large. It's not a United States problem. It's a human problem. I mean, these bankers are taking advantage of everybody, no matter where they live. So I think the commitment of traders just shows a huge amount of open interest, which means a huge amount of short positions, but conversely, a lot of longs. But the commercials, I'm sorry, I'm getting to the point now. It took me a while, have never been long silver that I can remember, and they are now. And if they know the most, and they're long instead of short, normally, and then they unwind their short positions, they might be from 50,000 contracts to 30,000 net short contracts. And then the whole thing starts over again. It goes up to 50 or 55, and the market comes falling down, and they buy back their shorts at a lower price, pocket the profit, and then it comes down to 30,000 again or 25,000. Well, that's not the case now. The silver side is massive, well, not massively long, but they're net long. At least the last time I checked on the commercial side. So this makes a great ponderance for anyone that studied this closely on what the heck is going on. Why are the commercials net long at this point in time when the price is so low? I mean, any fool wants to buy low and sell high, and anyone that's adding to a short position at these low prices, especially in silver, not necessarily as much in gold, is you got to be asking what the heck are they thinking? So a long answer, but it's bewildering, and it does portend something could be in the works. And it could be in the works before the end of the year. Now, I expect a massive move in the price of silver and gold before the end of the year, and the answer is not necessarily. But I'll caveat it with, if we get a massive move down in the stock market between now and the end of the year, we might see gold react instantly, like we saw just a few trading sessions ago where gold was up $30 in the U.S. while the stock market was off 800 basis to DJI. And we haven't seen a one-to-one correspondence on a day in a while. Usually there's a bit of a lag, but there wasn't this time. So there's a lot of smart money that's out of the stock market. And a lot of smart money knows that the best place to put your money when the stocks go down is in the gold.
Yeah, okay. Because there seems to be inflation in just about everything else. Prices going up in just about everything else. But so far, not really seeing it in silver. But nonetheless, do you think it's still possible where we're going to see $100 or $200 per ounce price of silver?
I do. I mean, I made the prediction of $100 an ounce silver back in the early 2000s. And, I study all the resources and report on all of them in the Morgan report. I mean, again, we've looked at rare earth elements and moly and lithium and copper and all these things and find good investments in most of the resource sector. But silver is my passion, or one of them. And if you go back to the book, The Golden Constant by Roy Jastrom, that studied the gold market for centuries and determined that gold is the constant, everything varies around it, and that gold actually does best in a deflation. And he made that point very strongly. And after he finished that, he decided, well, what about silver? So he went back and wrote and studied and did this, this great book called Silver, the Restless Metal. And what he determined for silver was as a mixed market, meaning in some cases, silver did pretty good in a deflation, and sometimes it did not. But the overall conclusion of that book is that silver is the one and only place to be in an inflation. In a severe inflation, if you don't own silver, you're going to wish to hell that you have it. And that always impressed me because, as we talked about on your interview, inflate or die. The Austrian view of inflation is an increase in the money supply. Well, in reality, the money supply increases every day. I mean, and so that means we have inflation every day. But the silver doesn't necessarily, react to it at any, specific given point in time, but it will at some point. So very bullish silver. I still think $100 silver is not out of the question at all. It could be 200. Who knows? We get a real currency crisis, and you get a reset. Currency values get reset against each other. You could see silver, pick a price at that point. You really don't know.
Yeah, a lot of people they are still bullish with silver, but being that it's been down and sideways for a while, we do see some people getting frustrated, and they've given up. I think you call this the wear out phase. But
Yeah.
yeah, but at the same time, we're at a point in history where we've never seen debt levels this high. But with this backdrop, what would your advice be for people who are holding silver now and are considering buying silver?
Well, I've been contemplating writing an article for a long time, and I'll probably get it out because once these things start to grind in my head, I usually have to get it out or it drives me crazy. I'm trying to be funny. But the article is a what if. And the what if is what if we were on a silver standard, you know?
Yeah.
People complain about silver being bulky, and see if I can do this quick without looking away from the camera for too long. But if you look at here's a Chinese panda. So you look at that one coin, okay, that's an ounce of silver, right? And you say, well, it's too bulky. Well, it's too bulky relative to an ounce of gold because a gold is like 80 times more valuable. But let's just, for a thought experiment, say that that was priced the same price as gold. Would it be too bulky then? Well, no.
Absolutely not.
It wouldn't be too bulky then. So I'm coming back to this article that's in my head. If we were on a silver standard and supply represented all the money in the world, what would it be worth? So take like the M1 money supply and think about how much that is versus, 2 billion ounces worth of silver above ground in an investment form. Or maybe better said, let's just look at it and just be good socialists and treat everybody the same monetarily and just give everybody the same amount of silver worldwide. So everybody on the planet, 7 billion people with 2.5 billion ounces of silver, rounded up to 3 or 3.5. Everyone gets less than a half an ounce of silver on the whole planet. That's it. In gold, they get about an ounce. So, how valuable is silver? Well, if you think it in those terms, and silver's a half an ounce for everybody in the world, that means all the money in the world distributed equally would be equal to about $7. Right? Because an ounce of silver in U.S. terms is 14-ish, so half an ounce is 7. So think about that. Times 7 billion, that's $49 billion. That's like pocket change. You get that eaten up in the interest rate in minutes. I mean, so this silver is money. Well, as money, it's almost infinite relative to the amount of money that's been printed. But yet people don't think of silver as money. And yet in all the Romance languages, the word silver and the word money are synonymous. And if you go back to the Bible, you find the word for money and silver in the Torah is synonymous. It's the same word. And if you go to the Chinese, the symbol, the character or caricature for silver is a house. It's like a bank. A bank is silver. So this idea that silver is not money just doesn't hold water with me. Now, certainly it's been taken out of the monetary system deliberately in 1873, and again, officially, I guess you could say, in 1965 in the U.S., but that doesn't negate the fact that the word itself means money.
Some people, the ones that have gotten out, they've started accumulating cryptocurrency, and it's had a huge year. Last year, back in 2017, Bitcoin was all over the place, and it's been classified as a new asset class. But some people, they like crypto, not precious metals. Some they like precious metals, not crypto. Others they do see the value of having or holding the two. How about you? How do you view cryptocurrencies?
Well, first of all, what I care about, no one should pay attention to. I mean, I know some will, but I'm free market. So, I wrote an article 4 or 5 years ago, my 2 bits about Bitcoin. I basically said, I will defer to the market. If the market decides Bitcoin's a great thing, then who am I to say? Philosophically, I'm against anything. I'm for competing currencies, but I'm not for anything that's unsound or unbacked. In other words, if there's just somebody making up a piece of paper and says, I'm going to divide it up 1 million times and I own it and I'm going to put it out to the highest bidder and there's nothing really of value there, I'm philosophically against that. And a lot of these earlier cryptos were of that ilk. I mean,
Yeah.
basically, it was a promoter with some name and taking a blockchain and using it to their advantage. I'm okay with the blockchain itself, and I'm fine if it's backed by something. That is a different animal because now it goes back to kind of the receipt warehouse thing where, this receipt is good for this much silver, or this receipt's good for this much tea, or this much of lumber, or this much coffee or cocoa, or this part of an apartment building. So I don't have any problem with it being used on an allocation basis. I think that's fine. And of course, as you well know, there's been several now, Kinesis and Lode that I'm involved with, and others that have a tie to a precious metal. And I think that may be the next leg up in the cryptos. I'm not sure. I am biased, so it's hard for me to think outside of my bias about honest money and true backing to a currency.
With the Lode coin, it does have backing. Would you consider it a stable coin?
No, well, that's a good question. I'm also at the periphery of the vault coin, which is something I wouldn't say stumbled upon, but something that came to my attention very early on because of my beginning the Lemuria Royalties Company that was bought by or merged with Nueva Granada Gold. And some of the people with Nueva Granada were talking about this vault coin, and that's a stable coin. That's probably the most stable coin that I know of. Lode wouldn't be necessarily, obviously, it's not going to go from 2 cents to $1,000 because it's the only way for that to happen is to be unbacked and for people to just keep bidding the price higher and higher because someone believes the next person that they sell it to, it's going even higher. So it will trade around the silver price, and there's an automatic kind of governor on it. I mean, I think Lode could and would trade above its silver value at some points in time. When the market got very hot, it could. And you say, well, wait a minute, why would it go higher than the silver price? And there's several reasons. One, the market knows more than anybody. Secondly, it's convenience. It's really easy. Plus, it's the privacy aspect. And lastly, it's the way the system is set up that isn't discussed very much, but the merchants that are involved with Lode, many of them, myself included, will offer goods or services at a discount. So like the Morgan report is $50 a month, but for a Lode purchase, I'd probably lower it to $40 a month. So you're getting like a 20% discount. So that silver is more valuable in the Lode program to both parties, to me, because I'm discounting my work, or the person that owns it. So it's like, well, you might pay a premium to own a Lode coin above the silver content because you want to take that Hawaii vacation, and instead of costing you $3,000, it only costs you $2,000.
Okay. I can hear people asking these questions though. Do you think cryptocurrencies in general have an intrinsic value, and are they a good store of value?
No, they don't have intrinsic value. Now, I've heard the argument that they do because, they use up computer resources and electricity, and it took ingenuity and intelligence to write the code and all that. And I get all that. But there's no end product. I think the simplest test is keep it really, really common sense. And I'm for specie, which means you can touch it. So if you got a Bitcoin, hand it to me, put it in my hand, and you cannot do that. But if you've got, a piece of silver, you can put it in my hand. So they are not. I mean, I just think it's intellectually dishonest to say that there's intrinsic value in something that's based on the internet being up. If the internet goes down, how much intrinsic value is a Bitcoin?
Yeah.
The
Zero.
internet goes down, how much value is in a piece of silver? Well, it
Still
might
there.
not be the bid price of the market close. It might be higher, it might be lower, but it has value. So, and I'm not against it. I mean, I don't want to be,
Sure.
people think I'm attacking it. I'm just giving you my philosophy. I mean, I have a very, very hardcore philosophy about money. And if you look at all these books in the back, about half of them have to do with monetary history and money and the ideas of money. And I've read both sides. I mean, a lot of very bright people will argue that money is an act of law, that money is edict, that as long as I'm the king, I can tell you what money is, and that's that, and that's the way it's supposed to be, and that's a great thing. I don't think it's a great thing, and I have looked at both sides. So sorry if I get a little wound up on it, but
No
I've never
problem.
found anybody to convince me otherwise.
Okay. David, before we wrap up, could you let our listeners know more about your work and the Morgan Report and what you're doing now?
Sure. Well, I'm going to be speaking at the Silver Summit or Silver and Gold Summit in San Francisco at the end of this month, 27th, 28th, and 29th of October.
Great.
So anyone that's listening to this interview that's at that event, please bring a book if you own one, either The Second Chance or The Silver Manifesto, even my first book that's getting on silver investing. I'd be happy to sign it for you. Anyone that's interested in seeing our work could go to themorganreport.com/join, JOIN, or themorganreport.com and just on our free email list.
We're looking forward to that. And we do appreciate your time, David, and we do wish you all the best.
Good. I hope I didn't bore anybody, and got my little philosophical moments in there for everyone to enjoy. Money is important.
That was David Morgan, publisher of the Morgan Report. For more of his insights on silver and the global economy, please visit his website, themorganreport.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content.